Hello, everyone, and happy New Year's. Well, happy New Year's Eve, I guess. I am Rachel Deschelle, Senior Manager of Trading Services here at Schwab, and your host for Trading Price Patterns, where we do exactly that. We go through and identify price patterns on charts, and then we talk about how to trade them. So today I am joined in the chat by Mike Fairborn. Please chat in your questions, comments, requests, and please follow us both on X. Mike is Mike Fairborn CS. I am Rachel CS. You will see a lot of chart postings and pattern postings from me even before you see them here on this show. So please definitely give us a follow. Please also like this video to help the algorithm and subscribe to our channel, Trader Talk Schwab Coaching on YouTube here. So today we're going to do kind of like a quick run through of a few different patterns. We're actually not going to be touching the options today. We're going to strictly focus on stock trading. We're keeping it simple with some of these price patterns. We can talk about some different types of trades that options traders may place with breakouts of these price patterns, but we want to make sure we can cover as much as we can today. So before we get started, let's dive into some of those disclosures here. So options carry a high level of risk, are not suitable for all investors. The information here is for general informational and educational purposes only, should not be considered a recommendation or advice. And we're going to cover today the Paper Money software application. It has a few differences between it and Live, so keep that in mind as we go today. For our agenda, we're going to start with a little announcement, cover our usual market overview, go through our existing trades, look and place new trades, and how to manage those. So before we dive in, let's just look at those upcoming workshops and market drives. We have one coming up here next weekend in Dallas. I will be there, so I hope to see you guys there. If you are going to be there, holler at me in the chat and make sure you say hi. We have one at the end of the month in Bellevue, Washington, and then we have one next month in Sacramento, California, all 2-day trading workshops there. So now since we've covered that, let's dive into Thinkorswim, do our market overview. We're going to mainly focus on the S&P 500 chart today when looking at our market overview. We are already a few days into this possible Santa Claus rally period that we look at, which is the last 5 trading days of the year, first 2 of this start of the new year. That really kind of tells us historically, statistically, how the rest of the year typically tends to shake out. And so far, really since the 24th, we saw that all-time high being made, and ever since we've had a little bit of a pullback here. And it may leave traders wondering, well, where could price possibly find support here within just this small window of space? And I'll show you a couple different things that I've been eyeing here on the chart. A few different levels of a confluence of support. So first we have this gap ledge that we had just from the gap on the 22nd here. So I'm going to highlight that there. That actually takes place at the same level, almost exactly the same level as that 20-day simple moving average right there as well. And since a lot of you are interested in the Fibonacci retracements, we've done I did a segment on this the other week. I'm also going to use a Fibonacci retracement just to show some kind of support levels from this recent swing that we saw. So I'm going to connect this low right here to the all-time highs and show you right where that level actually ends up. And would you look at that? If I actually zoom in a little bit closer, we can see that all 3 of those levels really are kind of coming to this confluence of right around the same level of support, which is around that 68, 60 level or so. So where that gap is, where that 20-day simple moving average is, and where the 38.2% retracement of that move the last few weeks is really possibly going to land this. I wouldn't be surprised, and a lot of other traders would not be surprised, that if this breaks, if we can't hold that 20-day, if we can't hold that first Fibonacci retracement support here, we may have a pullback to close this entire gap all the way to the 50% retracement, which I would say a lot of bulls wouldn't like to see leading into this possible run at the start of the year, this possible Santa Claus Day rally. So we'll have to keep our eyes on that. We are also seeing that the VIX while coming off of these yearly lows, it is a little bit more elevated today, just kind of coming off of that, which could probably be to some of the economic data that may be pouring out in the coming days, weeks. Also, just with that, another yet slight pullback in the S&P 500, maybe a little fear creeping back in, but we know volatility is mean reverting. So low volatility switches to high, and we have high that's switching to low. So couple things there to note. Now, since we've covered a little bit of the market, so we were only focusing on those two today, let's review some of our more recent trades that we've placed over the last few weeks. I know I've been on the road at some of the trading workshops, so I haven't been able to teach this class in the last few weeks. But just to remind ourselves, we do have a couple, or I guess one trade that we had placed. And I'm going to show you the backstory behind the trade to remind you of that before I show you the actual trade that we placed and the steps that we're going to take today to close out that trade. Well, first we saw that big nasty reversal, especially with this bear flag really taking place here with that move. We had a breakdown of that. We were looking for an entry of a long put option when price broke 2% below that flag pattern support. So our entry of our put position was when the stock was around 152.80. Since then, we've held this for a few weeks. We've rode down the wave almost all the way to the end of the measured move, which is now only a few points away now, right at that previous level of support where we see those lows that were made earlier this year. Now I'm going to zoom in a little bit to why I think it is, a couple reasons of why I think it's a good time to close out this particular trade right now. One, because we have made the majority of that move from that initial breakout. So when we do make the majority of that move, we can't be greedy and we want to take our profits where we can. The other reason behind this as well is when you typically start to see these really short candlestick formations here that take place. Let me zoom in a little bit further. Whoops. I'm going to zoom in a little bit further here so you guys can see these real close. But when you start to see some of these really compressed candlesticks, that's usually a sign that momentum to whatever trend that was following, in this case momentum to the downside, is slowing, and this could be a signal of a possible reversal. Because these are like, sometimes they're called like spinning top candles if they're found at the top of the market. In this case, they're almost looking like a series of really tiny dojis, but essentially what that means is price and volatility is just getting compressed and compressed and compressed. We're kind of probably at this squeeze period where we may see a reversal breakout from here. So especially since it hit these short-term lows here, if I just look at this recent low, and kind of where price is residing right now, it looks like it's finding short-term support around this level. So in this case, what I'm going to do is just cancel out these orders that we have in this OCO group that we have. And I'm going to click the X there, cancel 2 orders, and let's go back to our actual trade on Datadog. So this was the initial trade that we did. We went long the 20th of February, 160 strike put. We had 2 contracts of those. We bought them at $16.45. Right now they're at $25.50. We do have quite a bit of a gain on that. Like I said, nothing wrong with taking a profit here. So we were just going to create a closing order and sell this right now. We're going to try to go for the midpoint here, selling 2 contracts at $25.50. Limit good for the day. And everything looks okay to me. Send. Okay, we'll wait a second to see if that gets filled, but that was the only trade that we have placed in this account over the last few weeks just due to us not being able to teach this class. But let's look at a couple new charts today. Like I mentioned, we're going to focus more on just trading the initial stock. I think that will help us get into more, a larger number of charts today. So that's what we're going to go through, is look at the watch list. Now, the first one that we're going to look at is CSIQ, Canadian Solar. Now, while I'm kind of dressing up this chart, I want you guys to tell me there in the chat what type of pattern you see. To me, I think it's pretty obvious. It's a pretty clear-cut pattern, but I want to hear if you guys see anything else on this chart before I start drawing it out. So I'm going to give you a minute to respond in the chat what type of pattern that you see here. Okay, Sandman, I see you're the first bold one. You see a pennant, okay? You see a pennant. So a pennant would be if you are looking at a strong up move and then you're seeing a little bit of a correction period. So that would be like a pennant pattern. In that case, typically on the daily, pennant patterns actually form over a period of like 2 to 4 weeks or so. So in this case, I'm not necessarily going to call it a pennant pattern, even though it looks like one. I know a few of you are mentioning wedge, triangle, bear flag, all different types of things. I could definitely see that as well. But one of the things that actually sticks out to me is just how clear-cut this triangle pattern is. Just a simple symmetrical triangle here where we have those 2 touches on the upside resistance. We have 2 touches on the downside support. We may be having another little touch here soon as well. So I'm going to zoom into this a little bit more. Thank you all for putting that in the chat. Make sure you're staying awake here as we go. But if we look at this possible triangle pattern that we see, we are looking at it and we're going to measure this base on what we're looking at for the triangle. So the base is going to be from the lowest part to the highest part of the start of that possible pattern. So I'm going to connect that there. Now that's roughly a $10 move that I see there. And the reason why we're doing that, we'll show you in just a moment for those that are new to this class or new to trading price patterns. That's going to give us the measured move to the upside or downside, which we're going to draw here in just a second. But if we are looking at the overall context of this trend, we can see that the trend has been up. It's been in a sideways, almost really bowl-shaped pattern or basing pattern for most of this year. Started with that real cup and handle type pattern, but really has had a breakout and a run to the upside ever since. So if I had a guess on, or traders had a guess on where this may possibly resolve, it may resolve in the direction of the underlying long-term trend. Now, we do have the capability to craft trades for an upside break or a downside break, but in this case, we're going to look at the upside break in this case by looking to possibly buy the stock on a breakout. So if we're just zooming in, looking a little bit closer to this triangle pattern here, we see this candlestick forming right at this level of crucial support for our triangle pattern here. And what is this candlestick? Well, looks a little bit like a doji there, which we know with dojis, they can give us a possible reversal signal there. So that may tell us, especially since we're seeing a type of candlestick pattern that tends to give that pause, indecision, reversal. We're seeing that occur right near a level of support. That may give us an indication that we may see a bounce, a falling bounce over the next trading day to the upside. Obviously, we'd need to wait for confirmation to see that. So some aggressive traders that may be looking to trade this possible pattern may actually trade it on a bounce, a confirmed bounce of that lower move. But in this class, we always talk about waiting till confirmation of the final product of that specific pattern that we're seeing here. So I know one of the rules that we have looked at are actually looking for about a 2% break above that resistance. So if I just look and measure, let's just say next few trading days, let's use this point right here. If we see a break above this level by 2%, let's move this to 2%. Oop, exactly. Okay, so we move that to 2%. That may give us an entry price right at this level here at 27.86. Okay, so if we are expecting a move to the upside, and once we do see that break, a pattern trader that is bullish in this case would possibly wait until that 27.86 is met. So that is going to be our example entry for the stock today. Now, we've talked about where to place our stops, where price could possibly go back into the pattern. Some folks may place their stops if they elongate this pattern out a little bit further, and they may place their stop down here at the bottom of the triangle. But we've always talked about placing our stop in this area where price re-enters that pattern. So that's what we're going to look to do. If price re-enters that pattern by 1% or so, we're going to look to exit that particular stock position. So I'm just going to take this line, draw it down by, or I guess we talked about 2%, sorry. So if it enters the pattern by 2% here, that's going to give us an exit level of roughly, let's put that right on the dot there, 26.48 in that case, okay? So 26.48. I see a couple questions in the chat there. Chris, trading an F-rated stock, bold. We know that, we know our reports, guidelines, they're all based on different models, different methods. So today we are looking purely technical. If you want to look at the fundamentals, go ahead. We do always recommend in this class that we do say that technical analysis isn't your sole means of investment research. So take that with you what you will. But since this is a class that's not focused on fundamentals, we are just going to let the chart do the talking for us. And we are going to be in this short-term trade that really has taken a little over a month to form in this case. So very short-term in nature here. And then let's take a look at where a possible measured move to the upside or even to the downside could be. So I'm going to squeeze this a little bit, move the chart around so we can take this measured move. So in this class today, we're taking that bullish example of looking to the upside for an upside break. So what I'm going to do is just duplicate this drawing of the base, put it right at where our entry would be, and where we could possibly take profit, which is right up here, right at the end of that measured move. So right around 38 or so. Now, if we are a pattern trader that's looking to trade a downside break, I'm going to duplicate this drawing. Let's just say it breaks through right now or in the next trading day or so. That would give us a measured move to the downside. Let's put that right there, right where we had the other one. That would give us a measured move to the downside that would actually put us at that crucial long-term level of support. So for those that think this is an F-rated stock, fundamentally, technically, if that's what your technical view and your spidey sense is giving you here, you do have another way to trade that as well, because we do know that triangles can break in either direction here, but it's just kind of funny how sometimes math really lines up at some of these old levels of support and resistance, which is what we're seeing. So we do have 3 different levels that we crafted here, and so I'm going to keep those in mind as we are building our trade. So as we build our trade here, I'm going to click on the current price, go to buy custom with OCO bracket. Okay, and when we are buying, we'll calculate these the quantity of shares in just a moment based on our trade size. But essentially what we're doing when we take this entry order, we want to wait till the price of the stock actually reaches that level. So in this case, we're going to use a buy stop on the entry in this case. And the time that we would do that on a buy stop is if we are that technical trader that is looking to only activate a price or only activate an order when the stock is at or above a certain level. So I'm going to place our 27.86, forgot the dot there, 27.86 here, and link those all together and make this good till canceled. This is going to activate off of the last print typically with a stop order there. There is no guarantee at where we will get filled, but we know that when that price is met, we are going to send a market order there right after that activation is created there. Now for our upside limit, let's just put it at 37.98. 37.98 there. And for our stop to the downside, we do have a pretty tight stop, and we are placing that at 26.48 if price re-enters the pattern. Whoops. Now, if this pattern, like if it does retest this level and re-enters the pattern right around here, we would need to kind of adjust the stop just because of the way time kind of flows. We're setting this up for the future. So keep in mind, when you are managing a trade like this, you will have to adjust some of these possible entry orders, exit orders, just based off of where the price of the stock breaks out to, because we don't know necessarily where that's going to be. So just kind of keep that in mind, especially when you're trading a triangle pattern here. So a lot of times traders may just set an alert at certain levels as well. But today, since it's a trading price patterns class, we are going to trade this pattern here. But we are going to wait for confirmation. So if it never reaches that price of 27.86, we are not going to worry about it. So let's next, since our entry is going to be 27.86, we know we have about $6,400 to play with here. We're going to take $6,400, which is the 5% of the value of our account, divide it by 27.86, and that gives us 229.7. I'm actually going to bump that down to 228, just in case there is a little difference between where the order gets activated and where we actually get filled at. That way we're not going too over our trade risk there. Now, we're going to also update the rest of these as well. So I'm just going to tab out of that field. It's going to give us 228 shares that we could buy. It looks like this order is set here. And again, this will be a stop market on the downside. Remember the risk with that. Same as what we discussed on the upside. There is no guarantee there at your price of execution. So I'm going to hit confirm, put that in the price patterns box. Remember, we're risking only that amount, the amount that we are actually placing into the trade, but the trade risk that we are taking on is the difference between our entry price minus our exit price. So I'm going to send that order there, and that's going to stay in and working for us. Okay. Any questions here? Let's take a look. Oh yeah, I had a question on the trend line. So you can edit the view of your trend line or edit the properties of your trend lines just by right clicking on them and going to edit properties. This is a great question because we don't talk about this too often. But when you bring out this box to possibly edit this tool, you can change the width of the line to make it more prominent. You can change the style. I actually have mine to this middle hashed line there, and you can change the color as well. Now what I do is I save that as my default. So if you click save as default, it's going to save that customization that you've made to each and every new trend line that you draw. And I've even put other things like show label on hover, which is where you saw me making those measured moves, like when I hovered over the trend line there. You could do other things with this as well, but hopefully that helps in just how you can customize some of these things a little bit. Michael, I have a question there. The slope of the angles are both at approximately 14 to 15 degrees. What is the threshold when deciding if it's symmetrical or not? We just call the triangle. So if those triangles are looking like they're going to cross at a similar kind of speed and distance, we would call it a triangle there, especially if there's two touches on either side. So you can either call it a triangle or symmetrical triangle. The way that the language gets a little bit different is if you see like a typical wedge pattern where you may see 3 touches on support or resistance and 2 touches on the other side, and it seems like the prices or the arrows are moving a little bit more tilted in one direction than the other. You never have to be perfectly on the spot in this case, but we can clearly see just with the pattern, with the eyes, that this pattern would be considered a quote-unquote symmetrical, just because at the rate and speed at which both of these trend lines are moving. The only other term is those ascending and descending triangles where we have that set in stone line in the sand of support or resistance, and we have price either making higher lows trying to meet that or making lower highs trying to meet that level of support there. So hopefully that helps. Now, let's take a look, or I did see a couple other questions that I'm going to address. We can use the Fibonacci to see price entry as well. You can definitely use that when connecting swing lows to swing highs. That would be less of the pattern scenario in this case, because in this class, we are strictly just looking at the price. A lot of times in this class, we are not looking at other indicators. We are not looking at momentum indicators, because I saw a question on that as well. You can definitely use MACD and RSI as a type of momentum indicator, but we have to remember that price is king. The trend is your friend, and price is the number one thing that's going to matter in this case, because we have to remember that momentum is just a derivative of price. So it's only when price bends or when price makes a change that we're going to then look at the momentum in that case or make some type of other adjustment there, is if the trend bends, especially if we are a trend trader. But in this case, pattern traders. So we're not going to pay much attention to momentum in this case. Now we have that set. Let's look at a couple other patterns here. So I found ZTS as another formation, and we can clearly see, I think it's pretty straightforward what this type of pattern is, but hey, if you guys want to throw it in the chat, please feel free to throw it in the chat if you're seeing anything else that I'm not seeing here. But I know my eyes went to the bottom right of this screen, and the immediate thing that I looked at is going to be this formation forming at the bottom here. And I do see Kelly in the chat, price is an indicator. Yes, Kelly, you are right. Price is the number one indicator. That's what I wanted to stress here. So yes, indeed. But here, only Wing sees a W pattern. Yes, I see the same thing. It's looking like it's going to be a possible double bottom in this case. I know Kelly mentioned he saw a gap down in this case, but what I'm looking at is I see this level of resistance, which when you have a gap, this entire zone becomes a zone of resistance. But if we see that price came back up and kind of retested this zone where price initially made that initial high from, that kind of gives us a level of like, okay, hey, this is going to be a level where we are still going to have quite a bit of supply here, which would give us a valid level of resistance there. And then on the lows, we see these lows almost equal in price here being made. So if I take those lows and measure it to the highs of this pattern, to measure it there, that's going to give me about close to a $14 move in this case. So just like with the other pattern, you take the widest width of this pattern and we're going to project it to the upside. And the reason why we're doing that, we don't have two different ways this is going, is because the other pattern could be a continuation or a reversal pattern. But in this case, since this double bottom occurs at a bottom in price, it typically is a bullish reversal pattern. So we would be looking for a break to the upside in that case. And it looks like that $14 move would close that entire gap, which would be that next really valid level of resistance if price did start to trend in that direction there. So that's probably going to be the level that we are going to look to target there. So I'm going to place a price level right there on that one as well. And it's funny how math works out sometimes, how these patterns work out sometimes, where you just see it, it just kind of makes sense visually. It doesn't always work that way. Patterns aren't guarantees. It's not a sign that price it needs to go to that level. Remember, it could fail and move the other way quickly, or it could only move half of this length. It just depends, but it is funny to see when math, space and time kind of aligns there. So if our level in the sand that we're going to be looking at for the height of this is 129.31, what I'm going to do is look for a 2% break above that level in this case. So I'm going to take 129.31, multiply it by 1.02, And that's going to give me 131.89. We're going to put that as close to there as possible. Okay. So 131.89, we'll just call it 131.90 is going to be our 2% move there in that case. So that is where we would be looking to take that trade on a break of resistance here. And that 131.9 would give us enough confirmation just in this example trade to go long in this case. Now, what we may want to do is put our stop loss right below this level of previous, well, if price is above here, at this level of previous resistance, then it would be new support. So we may want to place our price or our stop right below that. We talked about like a 1 or 2% move beyond that level. So I'm going to calculate that as well for us. So if I take 129.31 times 0.98, that's going to give me 126.72. 126.72. Okay, close enough. 1 penny off. Okay, so this is going to be where our possible stop or our exit is. This is going to be our entry right here. This is going to be our profit target in this case. So if we look at our risk to reward in this case, we're just looking at one share. We can say our entry is 131.9 minus where exit or our risk would be to the downside of 126.71. That gives us $5.19. Now, if we take our profit target minus where our entry is, which is 143.28 minus 131.9, that gives us 11.38. Okay, so then if we take 11.38 divided by 5.19, that's going to give us our reward to risk there, which gives us about 2.2. So that is a favorable risk to reward ratio for a lot of traders, but some traders may actually look at a safer risk to reward ratio. And the way that you could just mitigate that is tightening up the stop a little bit or even lowering the entry a little bit. But I know in this case, we don't want to, just for the purpose of this webcast, we don't want to change our entry in this case because we still want to wait for that 2% confirmation, which is why I'm not going to change that. And I'm comfortable with that 2.2 to 1 reward to risk there. So that's how I'm going to build the trade in this case. And I see a question. I see a couple questions here. So with the price move to the right, how are you drawing this? I'm just using the price tool here, and I just double click where the price is actually taking place. And you can always right click, edit properties, adjust that. And then as far as calculating the entry, we took the very top of this pattern, the exact point at where it made those highs, and we projected 2% above that. So we took 129.31 times 1.02 to get that 2% move beyond that. So hopefully that helps. Okay, now we're going to craft out this trade. We're going to look at buying with an OCO bracket. So this first order is going to trigger a one cancels another, just like we did in the last one. We're going to make this good till canceled. We'll calculate the shares in a few minutes, but we're going to place our entry. We're going to take another buy stop order in this case. And we just got filled on that Datadog. We're going to take a buy stop entry at 131.9. Again, remember that risk with that market order there. We're going to place our profit target right at the profit target that we selected, which is 143.28. Okay. Then to our downside, we're going to take a stop. We're going to do a stop limit order in this case. We're going to change it up a little bit. We'll show you a stop limit. This is going to allow us to have a little bit more control over the price for our exit. And since the stop comes first, that's the activation. We're going to put that at 126.70. Let's put that at 75. We'll just put that a little bit higher. And since we know we want to get out at 126.70, 71, we'll place our limit there. And the reason why we do that, the reason why we're not placing those at the same price is because on the first tick on the stop, that is just your activation. So if on the next tick, the price of the stock goes down and you don't have a limit order that's at that price or below it, you're not going to see a fill until price comes back down comes back up to reach that level. So that's why we're going to do that. This allows you to have more control of the price with that limit order. That's why we're giving ourselves a little bit of a buffer there, just in a fast moving market. Or I guess we're going to look a little bit lower because I look at the spread 126.36, 126.41. So we're going to actually look a little bit lower. We're going to go to 70 and put this at 76. Just in a fast moving market, or if it gets to be a thin moving market, that's where we're going to get out at. So the other thing that we need to take into account is the number of shares that we can purchase. We're going to take 6,400 divided by 131.9. That gives us 48.5 shares. So in this case, we are going to go down to, let's just round down to 48 in this case. That's going to lock those all together. And I'm going to hit confirm and send, review my order here, place this in the price patterns. It looks like everything looks okay to me. We have that little difference between the stop and the limit. We're going to hit send there. Okay, so that one's out and waiting. Again, these we may not see a fill for a little bit, maybe at least a few days, maybe not ever, but we are setting up these. We're searching for these price patterns. We're taking our time. We're setting our rules. And if our rules or if our guidelines aren't met in our trade, that means we don't need to take the trade, and that's okay. So let's go through, since we have just a couple more minutes, we don't have time to place another trade, but we can look at a few price pattern setups and how you would trade them. So I think that would be the best use of the rest of our time here. So let's take a look at a few other ones. So EQT, I actually saw a few bear flags, bear pennants in the energy space here. So just kind of looking at this one, we had a strong steep move to the downside, which is typically what you would see with a bear flag or bear pennant. So I'm going to connect those highs to the lows that we see there. And then we also see these diverging trend lines, which is what we saw when we talked about that symmetrical triangle there. We see that they're kind of looking not too perfectly to the same slope, but they don't have to be. And that's going to give us looking like it's a support break today of that bear flag. So if we took that flagpole, measured it down from our breakout point, which is what pattern traders typically do after they look for that break of confirmation, their target may be all the way to the downside, right around this level, which actually, funny enough, it aligns with that zone of long-term support, which is those yearly lows. So another one where the math makes you chuckle a little bit. So that's one for the watch list there. And then let's take a look at EXE. Same type of pattern that I see is forming here, except it looks more like a flag than a pennant. So if we take this entire steep move down, connect it with the lows, we look at where price has really formed that area of resistance. We can also take this area of pattern support there, almost just like a textbook flag, a perfect little flag there, possible flag that we're seeing there. Again, these patterns are not guarantees. But if this does break through to the downside, whichever your confirmation is, where it's multiple closes, multiple candlesticks below that level, a percentage move, filter, whatever it may be, pattern traders may look for that break below it. And what we're going to do is just duplicate that drawing, measure it down if we did see that break. And where would that put us? That would put us right below yearly lows as well. So major move, again, if it goes above this level of that resistance, it would invalidate that pattern. Also, if it retraces more than 50% of this move, so like let's just say the price of this stock goes up to 116. 50% of that move down, that would invalidate this as a flag pattern. We do not see flags retrace more than half staff there. So keep that in mind. We have another one here, AMKR. This one I thought looked a little bit, whoops, wrong tool. I thought this one looked a little bear flaggy here, or like a bear pennant in this case, where we have just this kind of strong move to the downside. We have this little tight consolidation taking place. So if we take this measured move to the downside, I wouldn't even place it right around this level. Couple more to get through here. Galaxy. This is one that I've showed you guys a couple times before in this class, I believe. If not, I've shown it on X. So just another reason to follow me to see these price patterns. But this looks like a massive head and shoulders pattern, which is crafting out this neckline support right around $22 or so. We'll have to wait for that decisive break below. That's typically that bearish reversal type pattern. Same one with this one. Kind of a funky shaped head, but it looks like today we did have a breakdown of that possible head and shoulders. This is the funkiest head and shoulders that I've probably seen, with really tiny shoulders and a massive head, but there you go. And then UPS, we have a support retest of a cup and handle pattern here. So some traders, if this level holds, they may still look for this as another bullish entry to the upside of this bullish reversal pattern. And let's look at Berkshire. This one just broke out of a triangle pattern. We actually placed a trade in the long options class yesterday on this one. So if you want to check that, look at the archived videos there, but we're seeing two closes above that. And let's check the chat. I know that was a quick run through of that pattern watch list here. I had a question about how do you make multiple price bars like you just did, multiple price bars. You'll have to maybe refine that question for me there on that one, Shepard. And then Morning Rush, can you please confirm when we should scroll up or down when using Fibonacci? Okay, so we're going to go through that one real quick, just some of these Fibonacci rules, since this is a technical analysis class. So if you are looking for a pullback within the ongoing uptrend, in an uptrend, you're going to take a low to a high. So start your drawing from a low, connect it to the high, and that will give you those pullback levels of support where you may see either traders may place their stops there, or if there's a confirmed bounce from those levels, traders who are late to the trade may take an entry at those levels or add to their positions there. Now, as far as a downtrend, if you want to kind of forecast resistance levels to the upside, what you would do is go from highs to lows. So if I'm going to take the S&P 500's move here, I'm going to look for a long-term resistance by connecting those highs to the lows, and that's going to give me that level of resistance that we seem to have stalled out a couple times here on the S&P 500, which that 168.1 is a common level there that traders will look for some profit taking there. So hopefully that helps. I did do an entire class on Fibonacci's the other week, so check that out in the Getting Started with Technical Analysis playlist. But you guys were great. Thank you so much for your time today. Mike Fairborn, thank you so much in the chat. Please follow us both on X, Rachel-CS, Mike Fairborn CS. Please give this video a like if you found it useful, and please subscribe to us, Trader Talk Schwab Coaching on YouTube. I hope everyone has a happy new year, and I will see you next year. See you, traders.